Good evening, everyone. Thank you
Good evening.
thank you all for taking time out and coming for online version of Sunday Time Business Club monthly meeting. First of all, let me thank you, Mr. Viraj Dayaratna and also Mr. Dumit Fernando for taking time out and coming here uh, tonight to share your thoughts on these valuable topics. This time around, actually, we at the executive committee meeting, we decided to conduct the meeting on the stock market. As you all know, it turns out to be the one of the best performing market in the world, I guess, if I'm right. And to talk more about, we got a good speakers tonight. I'm pretty sure today's session is going to be very interesting and fruitful. Before that, let me outline today's sessions. Soon after my small note, our patron, today's moderator Faisal Samad, will take you through the rest of the day's proceeding. And at the end, as usual, we will have the Q&A sessions. You could use the chat box for you to raise your questions. So Faisal will take it up at the latter part of the Q&A sessions. Without taking much of your time, let me once again thank you all for taking time out and being here with us this evening, and hope you will have a pleasant evening. It's over to you, Faisal. Thank you.
Thank you, Sampath. For those who may not know, Sampath is the president of the Sunday Time Business Club, and he made the opening remarks. My name is Faisal Samad. Today we have quite an online participation, as you can see, because the topic is interesting, and we have invited the public also to take part in this discussion today. For today's meeting, we have Mr. Viraj Dayaratna, who is the chairman of the Securities and Exchange Commission of Sri Lanka, and Mr. Dumit Fernando, who is the chairman of the Colombo Stock Exchange. Our procedure, our protocol today will be Mr. Dayaratna will make his comments, followed by Mr. Dumit Fernando, and then we will open the floor for discussion. I have sent a message on the chat box to inviting anyone who wants to ask questions to type in their questions, make it brief, so that that we will take it up as we move along in this discussion. So to all those who have come in today, welcome to the Sunday Time Business Club discussion on recent trends in the stock market. I'll move on to Ms. Dayaratna. You can make your comments, Mr. Dayaratna. Please go ahead.
Well, thank you, Faisal, first of all, for inviting me. I think it's a timely topic, particularly at a time when we saw Bloomberg identifying the Colombo Stock Exchange as the best performing market in the world. And that was a huge achievement, particularly at a time like this, and particularly coming from a bad period from March onwards with the onset of the COVID pandemic. We, as you all know, it was not possible for us to have the market open for some time, but then we made every attempt, and then we managed to, no sooner the climate became conducive, when there was a possibility of movement, the market was open. Then we saw on the first day, there was the circuit breakers came on, and due to the market coming down rapidly. But from there onwards, Faisal, I would say it is from that day onwards that we saw this trend of the market beginning to perform, and way beyond anybody's expectation. And it was a gradual movement. I wouldn't say it happened overnight. From if you look at the turnover from around 750 million a day, it moved up to heights as much as 25 billion a day on certain days in January. And this also, I must say, this is not something that Sri Lanka alone witnessed, but around the world, markets have been doing well. And there are different reasons. And I would say if you, globally, I would say people have had more time to look at stock markets and engage in trading, because we had to be confined to our homes, and digitally people advanced. It was one of the positives that came out of the COVID, where people had to move away from physical activity and engage in to whatever you did, you had to basically do from home. So technology came to the fore, and I think that was one of the main reasons why the stock market got the attention of investors. People had more time, and that, as I said earlier, as far as Sri Lanka is concerned, I would say multiple reasons contributed to the growth of the market. I would say particularly the low interest regime. With the coming down of bank interest rates, people had to look for alternative investment avenues, and naturally people saw an opportunity in the stock market. That can be identified as the, I would say personally, I would say the main reason. Then we, that the SEC spearheaded the move to digitalize the end-to-end operations of the stock exchange. We were compelled to do so, and do so within a very short period of time, since we found out that during a situation like this, that we were ill-prepared, that we could not have functioned without interruption. So that drove us to conclude the digitalization exercise within a short period of time, and that meant that anybody could from the comfort of their homes or on the move, open a CDS account and start trading. That was one of the biggest achievements that we can be proud of, and that made trading easier. So that was a huge another contributory factor. Then awareness of about the capital market. I think social media also played a huge role. As you know, people being at home, unable to move about, they were glued to their telephone or the laptop, and the social media disseminated a lot of information. And there were if you look at the YouTube, there were people offering advice, the people talking about the stock market, new investors coming into the market wanting to try their hand at trading. So all those factors, and then the positive signals that the government sent out, we saw with the with the new government taking office in August. There was a new ministry created for capital markets. That the government sent a very positive signal to investors that they consider the capital market as an important place, that they were paying attention to the capital market. That was an important signal. Then moving on, I think the budget gave certain incentives. So there were a combination of reasons, I would say, that led to the performance of the market. And we are very happy about it. As the regulator, during the past 1 year where I have been in office, the new commission has been in office for a period of 1 year. We adopted a very market-friendly approach. We very fine balance between regulation and development of the market. That is something I emphasized at the very beginning, that we will not to affect the market. We will balance the twin interests of market development and regulation very carefully. And we have promoted the market. We have engaged. We have, I think, been very proactive. We have taken a very keen interest in developing the market, and whatever regulatory steps or whatever enforcement actions that we took during the past 1 year, we have ensured that such steps will not affect the market. So I think that is what that also has helped for in bringing the market to this level, with the CSE, we have worked together. We have had joint committees in respect of certain matters with regard to development activities. So together with the CSE, I think we have played a role, and we are very happy about the situation. A lot of investors have come in. Out of the, I think 90% of the new investors who have come in are within the age group of 18 to 35 years. That's a good sign. And I think I would stop there, and we'll go ahead with the discussion. Thank you.
Thank you, Mr. Daratna, for that overview and how the SCC had also managed the situation, a very positive situation. And largely, I think one of the fundamentals of that growing market was the fact that there was a low interest rate regime, which saw a lot of investors coming to the market. I'll now move on to Mr. Fernando to make his comments. Mr. Fernando, over to you.
Right, thank you, and good evening, everyone, and thank you again for having me on this as well. Certainly a very relevant time to discuss the capital markets in the country, since we have had a very strong start to 2021 after what was a very strong bounce back from when the markets reopened in May, as the SEC chairman mentioned. So I will start, I guess I will structure the few words I have to say on two things. One is, I think the role of a stock exchange in any market, I want to be very clear about it. First and foremost, our goal is to revitalize long-term capital mobilization through providing the stock exchange as a venue for companies to raise long-term capital that will be in the interest of their company's growth and therefore economic growth. Secondly, what we aim to do is broad-based financial prosperity. And by the emphasis there is, particularly at this moment in time, is broad basing. I think in the past we had pockets of large institutions and maybe a very narrow segment of individual investors who have benefited from the wealth creation. And as the SEC chairman also mentioned, we've spent a lot of time looking at how we broad base market participation, given that the environment has also been quite favorable for equity market trading. And then the final thing is for us to create this within a very trusted environment. And I think what we as an exchange work hand in hand with the regulators to do is to create a seamless environment for the first two things that I mentioned, which is for capital mobilization and active participation by investors, but also to do that in a trusted manner where we can facilitate how prices are formed in the market and how we can allow investors to build the right level of expectations in terms of rules and regulations so there's no unnecessary volatility. Now, I will also pause there to say what we are not in the job of doing. A stock exchange is a marketplace. We have very few levers to be able to dictate where the market moves to. And I say this because often we wake up in the morning and I read a headline and it is written how markets might have gone up or markets might have gone down, and how the stock exchange might be responsible for that. Like I said, our job is to facilitate proper price formation, to do that with a clear set of rules and regulations, and to make it as market friendly and investor friendly. And there are a number of other external factors that drive equity markets and stock prices, as most of you know. And the reason I say this is when we think about what are the strategic goals that we have for the stock exchange, which is a topic I want to get into next, it's very difficult for us to say our goal is to get the ASPI to 15,000 in 3 years or some goal like that. What we can focus on as an exchange working closely with the regulator, the SEC, is also to set targets around how we can facilitate, smooth operation, how we can make the market attractive for more companies to come and list, and how we can create the trust and the easy access for investors to come and participate in this market. So having said that, just to give you a context, this market, we are celebrating our 35th anniversary this year in its current form of the stock exchange. And I would say that most of you understand or know the stock exchange, the Colombo Stock Exchange, for one product, which is trading equities. Now, that is not entirely true because there are other products. We have products like debentures in the market that have also traded. But to put it in context, I think it's, what we have done so far is quite, strong and solid. But in the context of where a stock exchange can be in terms of the role within the national financial infrastructure, we feel our goals should be set much higher. And so one of the things we're really trying to do now is think about how we transition this exchange into a multi-product platform that allows different classes of investors to come and participate in different risk classes, different asset classes, so that we become a more complete venue for capital raising, for investing and creating wealth, and for risk management. So that's sort of the overall objective. Within that, we have 5 focus areas. One is doing what we can. As I said earlier, we can't dictate what the stock market stock prices are, but we can create and facilitate an environment for this. So our first strategic focus area is how we re-rate valuations in the stock exchange to the levels of peer markets in regional countries. Our second objective is to significantly increase the number of listed companies on the exchange, and that may be companies that are listed to issue equities or listed to issue debt. At the moment, we have about 290 companies that have been listed, and that number has been relatively static for a number of years. Our goal is, how we push that to more like 500 listed companies by the end of 2025. Our third objective, which is something we touched on, was how do we grow the active retail investor base by creating the enabling conditions for more individuals to participate in the market. Our fourth goal is generally improving the level of trust, both actual and perceived trust, with our many stakeholders, which include issuers, investors, and the public. And then our final objective is to create a path to operating profitability in a sustainable manner. And this is where I think the multi-product platform is very important for us, because equity markets, stock markets in any country, you have good years, you have bad years, and we can't depend on running an exchange that is heavily weighted towards a single product. Because what that makes us do is, obviously, in difficult times for equity markets, we are not able to invest as much in developing the capital market in a more broad sense. So we want to generate multiple products in this market, which gives investors multiple options, multiple asset classes to invest in, but at the same time will allow us to be more consistent in our operations as well. So those are the 5 strategic goals we have, and then I can go through one by one some of the individual goals that we have, and then some of these may come up in questions, but I'll just give you a quick snapshot. In terms of valuations, our market currently trades at about 1.3 times price to book value, or price to net asset value. When we set our goals back in the July, August timeframe, which is soon after I was appointed chairman, the market was trading at below book value or net asset value. It was about 0.8 times net asset value. So it's come up 1.3 times. Our goal for this year is to get that to 1.5 times price to book value, which should put us in line with many markets in the region. We also want to drive through that daily turnover levels. As Chairman of the SEC mentioned, in 2019, the average turnover, daily turnover in the stock exchange was 710 million rupees. Last year, it was 1.9 billion rupees. So it's a significant step up. This year, in our first sort of 28 days of trading, of working days, we've done about 9.3 billion a day. I don't expect that 9.3 billion to necessarily stay at that level. Clearly, in January, we had about 10 billion a day on average. In February, we've had generally in the range of 4 to 6 billion a day. But our goal is that for the entire year, we will have average daily turnover for about 4 billion a day, which again, compare that to 2019, that is 5.5 times the size of trading in 2019. In terms of new listings, I mentioned our 5-year goal, which is to get 500 listed companies. We expect to, we're pushing to have at least 20 new companies listed in 2021. We have about, I'd say about 12 companies in the pipeline looking at listing. We also want the market capitalization of this stock exchange relative to GDP to go up to 40% at the end of 2022. So again, about 6-7 months ago, this ratio was about 16%. Now it is about 23%. But we want to push this by the end of 2022 to about 40%, and then by the end of 2024 to about 60%. So that will come through a combination of more listings as well as proper realization of the value of the companies listed here. In terms of active retail investors, we would like to have about 50,000 active investors by the end of 2021. In 2019, that number was probably around 12,000. At the moment, last month we had over 30,000 active investors in the market. So we would like to have about 50,000 by the end of 2021 and push that up to 100,000 by the end of 2024. New account openings as well is a big push for us. So in this year, we'd like to achieve 30,000 new accounts. In January itself, we had about 3,000 new accounts that were created. And as the SEC chair touched on, the digitalization process that we joined last year, which now allows anyone anywhere in the country with a mobile phone to open an account and potentially trade within an hour. That has really pushed up numbers and helped numbers and opened up the stock market to a much younger generation. The SEC chairman mentioned, quoted some of those numbers of what % of new accounts are coming from people in the age group of 18 to 35. And that's a big win because we want investors who will live with this market for, in decades to come. Alongside that, we have a couple of big initiatives that should help improve trust in the market. And these are more market infrastructure related matters, slightly more esoteric topics, I guess. One is the introduction of delivery versus payment. For those who are not familiar with this, that's basically saying the delivery of the shares that you buy and the payment that you have to make when you buy it, that settlement happens simultaneously. So that's a process that we're working towards at the moment and should deliver within the next 2 to 3 months. And also we're pushing towards demutualization of the stock exchange. What does that mean? At the moment, the stock exchange, which was formed by 15 members, these are the 15 original stockbroking firms that formed this in the late 80s and early 90s. Those 15 members are basically responsible for part of the governance. The majority of the board of the stock exchange is elected from among those members. But at the same time, these members are participants, they're stockbrokers as well. So what demutualization does is separates the ownership rights of the exchange from the governance rights, which is a trend that we've seen pretty much all over the world. And the SEC and we have been working very closely on pushing the stock exchange to a demutualization, and we should see progress on that this year. What that does is, as I said, it really separates the ownership of the equity of the exchange from the governance rights of the exchange, which should even generate more trust in the exchange as an independently managed body that is in the interest of the public. And then the final point I made, which is around improving operating profitability by introducing new products. So our goal this year is to introduce at least 3 new products. You've seen the legislation for the first one, the REITs, or Real Estate Investment Trust, that's already been passed. Again, you know, a lot of credit to the SEC for pushing that through, something that has been in the pipeline for a while. We are looking at a number of other products like gold-backed trading products, short selling once DVP or delivery versus payment comes into play. And so hopefully by the end of this year, we'd like to have at least 3 new products on the market. So that's sort of outline of where we are and what we are hoping to do, because as I said, what we as an exchange and a governing body of the exchange can do is try and create as many avenues as possible for companies and investors to participate in the exchange and to create an environment of enhanced trust. We work very closely, obviously, with the regulators, the SEC, on creating that proper environment and in working closely with the government to maintain the right economic conditions as well, because the low interest rate environment has very clearly been one of the biggest catalysts in making the stock market and the equities as an asset class popular in the last 12 months. And we've also been lobbying to get certain tax incentives. You saw in the last budget that there were certain tax incentives provided for companies to come into list by the end of this year, which would allow them a 50% corporate income tax breaks for 3 years after that. So those are the types of things that are, market-friendly policy environment, a market-friendly, government can do. And we work very closely with the State Minister for Capital Markets, Mr. Nivad Cabral, on pushing that agenda as well. So I like to say that I feel that the stars are aligned actually for the Colombo Stock Exchange from a macroeconomic perspective, the regulatory perspective, in terms of our own intent, in terms of transforming this into a modern day exchange. We of course hope that everyone who has the means, including everyone on this call, if you're not already, will become a participant in some small way and then, grow with the market over time. But that's what we really want to do. We want, every citizen to have the access and ability to participate in and create wealth through the Colombo Stock Exchange.
Thank you,
Faisal.
Thank you, Mr. Fernando, for some of the points that you made were quite interesting. That it's a 35th anniversary of the CSA. Then there are plans to try and increase the number of listed companies from 290 to 500 by the year 2025. The stock exchange, by being a digital platform, has also and also another interesting point about the investing, that that's quite a new younger investors coming into the market. So thank you once again for those two presentations. We'll move now on to the questions, and I have 4 questions that have come on the group chat. I'll ask 2 questions and then get responses, and followed by the other 2 questions. In the meantime, if there are any others who want to ask a question, use the group chat, because it's easy and faster. The first question is from Mujib. He wants to know that there was some confusion in the market regarding a letter that was circulated to the brokers. What happened there? That's the first question. The second question is from Siva, asking a very pertinent question. What plans does the CSC and the SEC as a regulator have to attract the diaspora as an investor? And also he asks a follow-up question as to whether there are any plans to increase the trading hours because of the because it's the exchange, there's a lot of market activity. So may I ask Dumit to answer take the first two questions, and then I'll followed by Mr. Dayaratne. Okay.
Yes, thanks. I'm happy to. And I'm glad that first question has come up because it's certainly, a top of the mind issue and has got a lot of press, unwarranted press, I might say, but that's my opinion. So let me just state the facts here because there's been a lot of miscommunication, a lot of misperceptions. There was, yes, there was a letter sent to the CEOs of broker firms. This was not a letter sent to the public. This was sent to the CEOs of broker firms, in which the CSC requested a lot of information, which in most cases was being provided even prior to this letter on a less regular basis. I think what that letter requested for the most part was that some of that information be collected and reported on a more regular basis. At the same time, there was some reference to some individual stocks. There was no reference to understanding or inquiring into those particular stocks. The reference was actually to understand what debtor portfolios or debtors are those who are trading stocks on borrowed money from the brokers, and which is not an unusual practice. It happens all around the world. We have that we, as the exchange and the regulators, have put on it. We wanted to understand if certain high volume stocks, which had been trading at extremely high volumes in January, were supporting, and how much of those debtor portfolios were supported by those stocks. Now, once again, I'd be very clear, we did not at any point think that there was anything that was wrong with those individual stocks. It was a fairly mathematical selection of what those stocks were. So unfortunately, when this letter that we sent to brokers got out into the public, and it was not meant to be, and the reason I say it was not meant to be is not because there was anything to hide, because we knew what happened would be exactly what would happen, because parts of the letters would get cut and paste, parts of the paragraphs would get cut and paste without the big picture, without actually stating that this was an information request. For the most part, it was requesting information that was already being provided to the regulators. We were just asking for slightly higher frequency in that reporting. And it was purely meant for the exchange and the SEC to monitor the risk. So let me give you an example. You'll are all familiar with how the central bank monitors risk in the banking system. Now, I don't think it would be, anyone here would say that the central bank should not look at information from the banking system, from the non-bank financial system, which should allow the central bank to. It is true that every single stockbroker, we don't have a lack of confidence in how every single stockbroking firm manages its own risk. We have parameters in place, and we have mechanisms where we ensure through the proper management of the stockbroking firms that individual stockbroking firms' risk is properly managed. But no one other than the regulators will have access to and have really the regulatory authority to monitor the systemic risk across all of the market. And this was just a mere attempt at doing that. So what we did after that on the February 1st and I think February 3rd, we issued 2 new letters. Those are letters of clarification to make it much clearer if anyone hadn't properly read the first letter and reacted without really understanding what was said. We issued 2 more letters to make very clear what the intention was and what is it was that we were requesting, and to also make very clear there were absolutely no new restrictions put on anyone, on investors or stockbrokers through the first few letters. So I think that is now very clear. We've had many discussions with the stockbroker community as well to make that point clear. I think we are working on continuing to simplify how we can look at that systemic risk. But I want to remind everyone, we came off, we quoted these numbers, we came off January where, volumes were extremely high. They were 5.5 times the average daily volume we saw in even 2020. So I think you would all agree that as institutions that have a regulatory function, I think it is responsible and incumbent upon us to make sure that high volumes don't create higher risk. We did not indicate that there was higher risk. We just said we need some added monitoring. On the same token, if we did nothing and something somewhere went wrong, even if a market fell for natural reasons, we also know that we had a great responsibility. And I think everyone in the public would have said, what did you, the CSC or anyone else, do to manage and monitor risk when it was clear that the markets had gone to higher levels of activity? We're not saying high levels of activity are bad or that we don't like it. We love high levels of activity, but we just have to make sure that our responsibilities are also dispensed of in an appropriate and intelligent manner.
Mr. Dayaratne, would you like to also make any comment on that?
Yeah, I think Dumit has like to say is, as Dumit said, this was information that was being asked for. It was not a regulatory measure. I think that fact has to be made very clear. It was not a direction. It was just the gathering of some information. And as Dumit very rightly said, this was nothing new. I think 95% of the information that was sought was information that is presently being provided by the brokers. It's just that the frequency, we wanted it submitted on a more frequent basis, and there's a reason for that, Faisal, because as you know, both the CSC and the SCC, we have our supervision divisions. The broker firms, all our regulators are being supervised on a regular basis, and the supervision can take the form of off-site or on-site supervision. So considering the present times, it's not possible to conduct on-site supervision. So that is why we felt the best way to overcome that difficulty is to get this information on a more frequent basis. It is solely for that reason that this information was called for on a more frequent basis. And there again, as regulator, the CSC is the frontline regulator. We are the overall market regulator. We have to ensure that there is proper functioning of the market, that the integrity of the market is maintained. And I think there was some misconception. This is all, as Dumit also adverted to, it's all about misconception, Faisal. I think misunderstanding that this letter unfortunately came to be discussed in the public domain, and that seems to have created this unnecessary concern. So I think we need to move on, and there was no attempt whatsoever. I think there was a perception that this was an attempt to curtail or even stop broker credit, or I think some had even said that this was margin credit, the providers were being asked to curtail their lending. I think that was the misconception, and we need to make it very clear, Faisal. We have the SEC and the CSC. We met the broker CEOs last week. We had a very candid conversation on all matters, including this letter, and what the idea behind that was, and we made it very clear that there was no attempt whatsoever, no intention to curtail or stop credit. We all know, as Dumit said, around the world, people trade on credit, but there are certain limits that are imposed, and the brokers were within that limit, but all that we as the regulator and probably the CSE was concerned was that we will not overstretch. That in order to maintain credibility of the market and ensure the protection of investors. It is with that intention, and as a regular supervisory function, and not certainly not a regulatory action. That much I would like to explain, Faisal.
Yeah, okay. Okay, thank you, Mr. Daratna. Mr. Fernando, there was another question that was asked in that series of questions about attracting the diaspora, and as to whether the trading hours would increase because of the number of transactions.
Sure. Yeah, thanks. The diaspora question is something, very much that has been in our minds for years. We have attempted marketing directly to some of the diaspora as well. I mean, we were with the stock exchange, does regular roadshows internationally, at least we did during the pre-COVID period. For example, we went down to Australia, a few years ago, and that was purely around trying to attract the diaspora. We have continuously looked at engaging with the diaspora in the Middle East. And look, I mean, I think while what we have found, I have to be very frank, I'm not, we will sort of never say never. We will continue to, focus on that opportunity. But I think, to be quite frank, the opportunity that we thought was there has not necessarily panned out in that way. And that may be because over the last 5 years, at least, stock markets have not, performed as one would expect if you're going to bring in diaspora money into the country. Just to give you a sense, 2014, the ASPI was up 24%. And then after that, we had, relatively flattish years. And then 2020, was the first time we had a strong double-digit positive year, where the market ended up 12% from the beginning of 2020. But of course, I think it was up about 66% from the bottom of, that we reached in May. So that's really what I have to say. We continue to look at including diaspora communities and marketing to them. In fact, one of the things we are working on is through our digitalization process. We are looking into how, through the digital app, account opening app at the moment, if you're local individuals, you can very easily open an account. But if you're overseas Sri Lankan with an identity card, there's still an issue in terms of opening an account digitally, which is not a restriction we brought on. It is due to the central bank's FIU unit's restrictions, the Financial Intelligence Unit, which looks after anti-money laundering matters. So we're trying to work through some of those technicalities, because we do feel when markets are good, like it is now, the diaspora would be much more keen to invest. Unfortunately, we are not in a position to actually go and market physically like we have done in the past because of the travel restrictions. However, we are working together on an overall Sri Lanka investment, virtual pitch to be done globally across several days in multiple regions. We're working closely with the BOI and the Chamber of Commerce to try and arrange something where probably in the April timeframe or May timeframe, we would be able to project the opportunities here virtually, but globally. And we are working very closely with our missions across the world and through those missions, hopefully make sure that the diaspora is well informed of this promotional campaign as well, so that we can see more of them coming on into the equity market as well.
About the trading hours.
The second question on trading hours, it's a very interesting question. So if you go back to 2019 and the years prior to that, quite a large percent of trading on the exchange, anywhere from 30 to 50% of trading turnover came from foreign investors. One thing we have seen in the last year, which is not dissimilar to other emerging or frontier markets, post-COVID, a lot of foreign investors sold out of markets like this. So we saw significant net outflows. We're starting to see the buying coming back in, but we're still seeing outflows on a net basis. So the interest among foreigners has been a little thinner. On the same token, 95% of volumes right now are being done by local investors. Now, it's a very interesting debate because a lot of local investors actually engage more in the market because the hours are shorter, and they can actually, from 11 in the morning to 2:30, that's 3.5 hours, they can actually dedicate a huge amount of their time to watch the market. So some of the feedback we have got is if the market hours are extended, some of these local investors may not be able to actually actively trade during the day because they don't know, they don't want to buy, and then, because there is, high frequency trading, they don't want to miss out opportunities and so on. So it's a fine line. We're trying to we balance this. I think over time, our goal is to get all investors, not just local, but international investors as well. And extending hours will, of course, be much more important if we have much bigger interest from foreign investors. So I guess the only response I can give is this is not something we are doing because we want to keep this market closed. It is something we are doing because we want to maintain the highest level of activity in the market. And actually it feels the feedback so far is that a shorter market may allow people to actually concentrate on this a little more. There is one operational issue as well, which is because of the high activity levels in this market, we also need to have adequate time post-market close to do all the post-trade settlements and so on. So the market still closes at the same time it used to close before. And so we certainly are not looking to extend hours at the back end at the moment. So if at all, we'll, at the right time, look to reopen at the right earlier times that we were used to.
Okay, thank you. We'll take the next set of questions. There is a couple of questions based on market manipulation and as to whether the SEC has the legal framework to deal with it. And in that also the question of investor trusts. There's one person had asked as to there were wild swings in the market yesterday and the day before, and there is a suspicion that this might be manipulation taking place. So that's one question. The second question is a general question where it is asked as to why economists have diverse interpretations of the stock market. Is it because they are politically biased? So these two questions, I'll forward it to you for your responses. Dumit, can you start with the response?
Yeah, look, I will maybe take the second question, okay, and I'll touch on the first question after that, which would be a nice segue, I think, to the SEC chairman on the second one. Why do people have diverse interpretations? You know, economists have diverse interpretations on pretty much everything. You know, we found this when people were trying to predict the economic growth for the country last year. It ranged from, you know, some people who said minus 15% to some people who said, you know, positive 3%. So look, I'll give you a few examples. You know, when we look at the price earnings multiple of the market, you know, right now on a trailing multiple basis, you know, it looks high. It's in the mid-teens. In the historical context, it looks high. So some people say, you know, it's expensive. I look at it when you know, I always say with the information and data to be a good investor, you have to always peel the onion an extra layer or two and really understand what's behind the facade. Why is the P multiple high these days? Because it's not that the P is too high, it's that the E is too low. You're coming off a year, the 2020-21 financial year, when most companies' earnings took a drastic hit due to COVID. Now we're seeing some of those companies reporting excellent earnings in the last quarter. But in Q1 and Q2 of this financial year, a lot of companies' earnings got hit due to COVID. They simply couldn't operate. So your earnings are going to be down. So if you look at the backward-looking price earnings multiple, your earnings will be tiny and your price may be the same, but your PE ratio has gone up. So some people who don't really understand this will say PE is high, therefore the market is overvalued. But there is more to it than that, right? So that's why this year we've started to look the price to net asset value as a better multiple to look at in a historical context, because the net asset value fluctuation is much smaller than the earnings fluctuation due to COVID. So look, it's also, I mean, there are some very obvious things that have happened in the market. I think the SEC chairman touched on this. One is that interest rates have dropped by 400 basis points. If you go and look at a 6-month or even a 1-year, you know, fixed deposit, you're looking at 4%, 5%. In a reputed bank or a reputed finance company. Now, just think about that. What that means is for 100 rupees you put in now, in a year you'll get 4 or 5 rupees back. Now think about the stock market. You know, when that 4 or 5% not too long ago was 12 or 13%, you could get 1-year rates of 12 or 13. At that level, you know, you could get 12 or 13. On the other hand, for companies, listed companies who have to publish earnings, earnings is what drives stock prices. Their earnings were depressed because their interest costs were very high, because market rates for interest were very high. So the cost of financing was high. Now it's both of those things have changed, right? They've gone upside down. For the investor, I'm not getting the 12 or 13%. I'm getting 4 or 5%, which is not that exciting. Inflation is at 4.5%. So you're actually potentially getting negative real returns from many short-term investments. Take the stock market. Your dividend yield itself is about 2.5%. So all you need is your stock price to outperform by another 3%, and you've covered the made 5.5%, which is more than your short-term interest rate. So you can say that the market is up, you know, 30% or, you know, 66% since the bottom of May, and therefore it's overvalued. Again, it's not a very deep explanation. I think what you have to look at is what is driving this market. The lack of proper investment alternatives in the fixed income space is driving interest in the equity space. And in a regional context, in a historical context, the market is still valued on whether it's a price to earnings basis, price to book value basis. When you look at the forward performance, the market is actually not overvalued in that sense. So that's how I would say. I think the answer to the question is it depends how you take the same data set and how much insight you use to interpret that data. And of course, there are negative biases. There may be political biases. I'm not going to get into that. But, you know, bias is is present in every decision I guess we make. But at the same time, that's why market exists, right? There's got to be someone who says, I'm going to sell at this price, and someone who says, I'm happy to buy at that price. If everyone says that price is too high, no one's going to buy it. You'll only have sellers. If someone says that price is too low, you won't have sellers, you only have buyers. Then there is no market. So this difference in views is actually a critical aspect of how a market works.
Mr. Dayaratna, can I ask you the question of investor confidence vis-a-vis perceived market manipulation? How is the SEC responding to that?
Yeah, Faisal, it's very important. Investor confidence is very important. So that's why, as the regulator, we have to instill that confidence that the regulator is alive to what's going on, is keeping a close tab, and also that if there is market misconduct, that the regulator will not hesitate to act. So that's the confidence we need to build. And at the same time, I told you, Faisal, the present commission has realized, and we know that it's very important to maintain this balance, because if you look at our objectives of the SEC, it's to regulate the market as well as develop the market. So it's a fine balance that we have to ensure. So that is where we know our role, we know our limits, and that's how we have acted. If anybody were to look at us, how we have acted during the last 1 year, we have been alive to this reality, and well, in order to ensure that the sanctity of the market is maintained, I think we have said this before. We have now the number of trades. If you take on average, what would have been maybe 10,000-15,000 trades a day in 2019 or the early part of 2020, now has gone up to over 60,000 on certain days. It has gone beyond the 60,000 mark. So it's a tremendous task for the regulator to keep a tab on it. But we have strengthened, we have said this before, we have strengthened our surveillance and supervision division. We have a real-time surveillance division where they monitor the transactions. And I think the question was whether market manipulation is an offense. Yes, market manipulation is an offense. And it's an offense in terms of the rules made by the SEC. Rule 13 speak, Rule 12, we have Rule 12, 13 and 14 in the rules. Rule 12 is about creating a false or misleading appearance of active market. Then we have creating a false market by trading without an actual change in beneficial ownership. And the third, which are known as wash trades. And the third category is front running. So these are, if anybody engages in this conduct, it would amount to an offense, and our surveillance division will be able to observe it. And also remember, Faisal, I would like to emphasize on this. It's important for investors to know what conduct is prohibited, because if you don't know what conduct is prohibited, they wouldn't know whether they are crossing this fine line between what is permitted and what is not permitted. So in order to ensure that investors are aware of what would amount to market misconduct and thereby commit an offense, the SEC, through its social media, we have disseminated information. We have informed the public, the investors, as to what conduct would amount to market misconduct. Of course, even in the absence of such creation of awareness, I mean, you ought to know what market offenses are. So we are alive to what is going on, and we will. Our approach has been slightly different. We are of the view that we need to prevent. We should not allow things to happen and not think of cures. We need to prevent and nip things in the bud. So that's the approach which we have adopted, and that's what we practice. Our surveillance division is it has been strengthened. They are watching what's going on, and it's not an easy task. You can't overnight decide as to whether an offense or market misconduct has taken place. You have to analyze data and see, pay attention to the nature of the transactions, the patterns, and so on. So we are keeping a close tab on what's going on, Faisal.
Mr. Dayaratna, there's a follow-up question on that. You would be aware that in the period 2011-2012, there was a lot of allegations of market manipulation and pump and dump. And now coming to today, where there is a large number of transactions, and as if you said, it's not very easy. Can you give us an assurance as to whether the SEC is geared to prevent a situation that prevailed in 2011-2012?
Yeah, I think, Faisal, the other day when I told the brokers also, past will always come to haunt us. But I think we should not always dwell on the past. We should ensure that we move on. So at present, we are keeping a close tab, as I said earlier, and we have strengthened our surveillance division. It's not an easy task. I don't think we can altogether prevent any misconduct. There are a lot of trades that are taking place, but we are keeping a close tab, and I can give the assurance that we will, whenever we find that if any misconduct has taken place, we will continue to monitor the situation. We will continue to do our investigations, and we will be alive to that task.
Okay, thank you. I'll take the next set of questions. This one is for Mr. Dumit Fernando. The DVP, when would it be in force and when would the trials start? That's one. The second question is also for Mr. Fernando. If I read it right here, there is a question as to the impact on the commission charge and whether the commission charges would be kept on par with other world markets. Will you be able to respond to that, Mr. Fernando?
Sure. Yeah, on the DVP matter, so this one actually, our original goal was to have this close to complete by end of last quarter or in this quarter. And when COVID happened, actually we had a physical problem, which is that a lot of the servers that had to be shipped in here did not arrive on time. So there's a delay in that. That was one technical aspect. The other aspect is we have been, consulting with external legal counsel as well, and we are finally now going through the regulations that would need to be brought in, and hopefully we have a board meeting tomorrow where we're hopefully going to agree on that, which can then be forwarded to the SEC for review. We've been working closely with the SEC. I think the SEC has also done its own independent reviews of the methodology that has been explained. So I think we're pretty much good to go on that front. So once that is put in place, then it's a matter of getting those to be well understood by the market, which is the stockbrokers and obviously investors, ensuring that the rules are understood, mechanisms are in place at the stockbroker level to monitor and execute on the DVP plan, and then finally the systems testing. So the first part of this was done earlier this week, which was the testing of the connectivity between the stock exchange systems and the broker back office vendor systems, not the brokers, but the broker back office vendor systems. So that was done on Monday. The next step is to check that the systems between broker back office systems providers and the brokers is operating as well. That'll happen in the coming weeks, and we are on a very sort of moving timeline because we're trying to get everything done in sequence as soon as possible. But I will say we are aiming at this stage towards having this done, I would probably say in the April-May timeframe to actually be able to launch DVP in the market.
Thank you.
Okay.
I'll move on to the next few questions.
Yeah, so there's one more question, Faisal, on the commissions.
Yes,
Yes, I think commissions are, I think that's, again, I want to put this in context. I think more than just the commission, I think the overall cost of trading is what many people have commented to us about. One thing I would say, and this is not making an excuse, I think it would be important for people all to remember this in the context that we have zero capital gains tax for listed shares trading, right? So in many other markets, you might be able to trade, your daily trading cost might be half of what you pay here. But once you exit a position, you're paying significant 10 to 15% capital gains tax. So I would just encourage people to think of it in that whole context. Having said that, our commission rates and trading costs higher? Yes, they are actually one of the highest. Look, I think as we move to a higher volume environment, we will be able to think about how we can be flexible with that, because whether it's a high volume or low volume environment, the people who actually benefit from the commissions, which is a combination of stockbrokers, the CSE and the CDS through commissions collected there, and the SEC, we have a huge fixed cost to run, right? So just to give you an example, the CSE, we ran an operating loss, I think, from 2011 onwards, and last year was our first year of operating profits because volumes went up, and therefore the commission structure or the CSE fee structure was able to generate some profit. Now, it hasn't overcome the operating loss that was made in the years before that. It's the same story, to be quite frank, with many of the brokers. I think many of the brokers were running at losses for years before that because the volumes were low. And imagine if commission structure was much lower, I think that would put the system in much more of a challenge. And why is that important? I'm not suggesting it is in our interest to make sure everyone involved here enriches themselves. The point is there's also the right, there's a right amount of strength we need in the system, whether it's stockbrokers, whether it's the exchange, whether it's regulators. And that strength comes from the ability to invest in the right things, to fund the right expenses. And many questions are asked about, what are we doing to watch market manipulation? What are we doing to regulate the market? All of that takes people and technology, and that's cost, right? So we can't strip down commissions to a level, not yet, to a point where the people who need to operate a smooth functioning market are not able to do so. To make sure our IT systems are upgraded, to make sure we have the right quality of people in all the functions in terms of regulating, to make sure all the brokers are able to hire the right people who can give clients a good service. That's why the sustainability of this market requires that. But as I said, I think if volumes are sustainably at a much higher level than it has been, I think this topic will certainly be something that will be in everyone's interest to debate again.
Mr. Director, there was a question about the draft SEC Act and as to when it will come into force. What's the game plan?
Very, very good that you raised it, Faisal. It's very important for confidence building. There was a question about attracting the diaspora to invest. I think if we are to attract foreign investment, we need to ensure that our laws are in place and that we are no different to any other market and that we are moving with the times. So with that intention in mind, we have finalized the new SEC Act. There was a draft that had been prepared in the past, but the present commission went through the draft very carefully, and we have fine-tuned it. We have ensured that practically there will not be any issues, and we have revamped the draft, and we are happy to say that it went to the legal draftsman, and it was sent back to us after the legal draftsman made certain. Actually, those were superficial changes. They did not make any changes other than the superficial changes, and it came to us yesterday, and today we sent it back to them. So the draft is ready. The next step would be for the LD to send the draft to the Attorney General, and once the Attorney General clears it, it will go back to Cabinet. And then once the translations are done, there again we have offered our help. If we have said that if our assistance is necessary to expeditiously conclude the translations, I think there won't be much of an issue with the translations. And our expectation is that the act will be brought to Parliament within the first quarter. And Faisal, there are many salient features in the new law, not only for better regulation, a lot of provisions with regard to market development. Then with that will follow the demutualization law, which will, the law as at now does not permit a company limited by guarantee to be converted to a company limited by shares. The present stock exchange is a company limited by guarantee. So in order to ensure that we demutualize the stock exchange, we need to bring in that legislation. So the demutualization law will enable that for the company to be, the CSE to be converted to a company limited by shares. And that too will happen. The only issue was the share allocation. And I was told that the broker community has responded positively, and the share allocation of the demutualized stock exchange, I think, will not be an issue anymore. And we can, along with the new SEC Act, have the demutualization law also brought in, which will be a significant, which will bring in a significant change to the present setup.
Thank you. There is a bit of a long question. I think this might apply to both Mr. Fernando and Mr. Bharatna. It's about, the ethics of directors, boards of directors of companies. An example, for example, if an investor holds shares in a land asset-rich company for around 3 decades, suddenly the company disposes of the assets and puts that money in fixed deposits, earning a very meager 5 to 10%. In such a case, the investor, having sacrificed attractive returns for around 3 decades, finally has no remedy. Is there something that the SEC can do, or the CSE can do on this? I hope you understood the question properly.
Sorry, Faisal, the question was not all that clear to me.
Not clear. I think what he says is that a company which has a lot of assets, and based on that, these are rich assets, land-based assets, investors put their money in this company and holds on to their investment, and then suddenly the company sells the land and puts that money in fixed deposits, which bring a smaller return. And such investors are now kept, their return on investment is very low because the land has been sold. I think that's exactly what, I think that's what he's asking. It goes on to several lines, but did you understand it properly? I
think if I understood it properly, it's about investments of a company where they change their investment maybe from holding property to to say the sale of property and investing that money in fixed deposits. So that's an issue with regard to the management of the company by the board of directors, Faisal. As you know, the management of the company is in the hands of the board of directors. So this would become an issue of management of the company. And if one is dissatisfied with any decisions of that sort, then it's a matter that has to be dealt with in accordance with the Companies Act. You will have to use the provisions that are available in the Companies Act and move against the directors if the shareholders are of the view that there is mismanagement. I mean, there are provisions where derivative actions can be brought in for operation and mismanagement. I think that will be the shareholder who is dissatisfied will have to resort to such a remedy.
Yeah. Okay. Thank you. I think the question on the group chat, that's the final set of questions. We have a few minutes more. If there is anyone on the platform who would like to ask a voice question. Any other question that someone would ask? Or is there any sorry, yeah.
Hello. Yeah. When the share price was going up from December 15th to till January 31st, CSE didn't ask.
We can't hear you. Can you come closer to the mic?
Right, okay. When the share price was moving up from December 15th till January 31st, CSE didn't ask any questions from the stockbrokers. All of a sudden, we are asking the stockbroker to deliver the two weeks this thing or 1 month. You are asking all the questions from the brokers within the trades what has happened during that month. Why you all didn't ask during that period, that 1.5 months?
Mr. Fernando, can you respond?
Yeah, no. So we monitor markets. I think I need to be very clear of the responsibility that we have, and I think I made that clear early on. So we have a responsibility to monitor and understand what's happening in markets. So just because we do not ask a question earlier does not mean we were flying blind. We have a team that has been operating in these markets for 20, 30 years. So there are tolerance levels in market movements, market volatility that we watch very carefully. And if things get beyond those tolerance levels, then we believe that it is our responsibility to inquire and find out more information. So as I said at the beginning, when you say what we acted, it was just an information request. So markets went up for a extensive period there. But again, in the grand scheme of things, 1 month is a short period of time. So in that 1 month period, market went up very quickly. We also understood that there was a lot of new liquidity in the market. So this wasn't that was evident through the high daily turnovers, and we can monitor those. It's not that a few small investors were responsible for all the turnover. As I said, there were 3,000 new participants in the market in that month. So it's a balance. So we have to watch all of those. We can't react too early and we can't react too late. So I think maybe we could have done it a day earlier or a day later or a few days plus or minus. But, we kept monitoring it. Like I said, it wasn't that we were blind to what was happening. We monitor it. And then when we feel like we've reached a point where we've got to, find out more information, we went and asked for it. That's merely what happened.
Thank you. We have time for one more question before we close the discussion.
So can I please ask a question on the same line?
Please, the final question.
Please, I want to ask Mr. Fernando, after this intervention about, or at least checking up on the lending and all that done by the brokers, you think the market has come to a stable state, you were saying it was going a little beyond control, and then you asked these questions, not in January, but maybe late January or early February. So now at the moment, the market is not overheated, or is it in a better place than what it was in January?
First of all, I did not say that the market was beyond control. I also did not say there were any interventions. All I said was we felt there was a need, judging by what was happening in the activity levels in the market, that it would be prudent for us to monitor more information. So what has happened in the market, I can't say it was due to an intervention because there was none actually, right? In the sense that we did not change the rules on broker credit. We did not change the rules on trading. We did not tell investors what they should or shouldn't do. We looked for some information. Now, if some investors, and we never meant for that information request to actually go out publicly because we knew then it can be misinterpreted very quickly. Unfortunately, it did get into the public forum. So to your point, I would say the only reaction, if at all, was because people, in this case, the public, read too much into the information request. So there was no intervention. But so with our information request, we were not actually intending any change in behavior because we actually never intended that information would be in the public, right?
Thank you. Thank you. I think we have come to the end of the very interesting discussion. I will now move on to our club secretary, Samita, to make the customary closing remarks.
Thank you, Faisal, and good evening, everyone. I believe it was very interesting and informative session. A lot of information shared by two speakers. So on behalf of the Sunday Times Business Club, I would like to extend our sincere appreciation to two speakers, Mr. Viraj Dayaratne, Chairman of Securities and Exchange Commission, and Mr. Dumit Fernando, Chairman, Colombo Stock Exchange. A lot of information that you all shared. Mr. Dayaratne mentioned the opportunities available in the market, mainly because the interest rates are coming down. And one important point that you mentioned was your interest to develop the market and to regulate it. So thank you for sharing all your views this evening. And Mr. Fernando, you shared some thoughts. You mentioned the 5 focus areas, and you mentioned that intention is to increase the listed companies to 500 and also to have active investors about 50,000 and to introduce 3 new products and so on. So once again, Mr. Fernando, thank you so much for sharing your thoughts this evening. And also Mr. Faisal Samad, our moderator and the patron, thank you for your thoughts as well as moderating this event this evening. We had a lot of participants today. We had the club members, we had the invitees and so on, and there were a lot of questions to the 2 speakers. And on behalf of the Sunday Times Business Club, I would like to extend our sincere appreciation to all of you for joining with us this evening. And of course, the executive committee headed by the president. This idea was from the executive committee to hold this discussion on the stock market. And thank you once again for the members of the executive committee. With that, I would like to conclude the event. And once again, thank you for joining this evening with us, and we'll let you know about the future events. Thank you, ladies and gentlemen.
Thank you for having us.
Thank you.
Thanks.